Investing wisely is the cornerstone of financial success. Today, we embark on a journey to uncover the strategies that have made hedge funds synonymous with successful investing. Throughout this video, we'll explore the intricate world of hedge fund strategies, shedding light on the techniques employed by top-tier investors. From risk management to performance evaluation, we'll cover it all. To stay informed and be part of a community, don't forget to subscribe to our channel. Let's dive right in. Hedge funds are sophisticated investment vehicles that pool capital from accredited investors and institutions to employ a diverse range of strategies in pursuit of returns. These investment funds, typically managed by skilled and experienced portfolio managers, aim to generate profits regardless of whether the broader market is rising or falling. Hedge funds may engage in strategies like global macroeconomic analysis, event-driven investing, and statistical arbitrage, among others. While they offer potential for high returns, they also come with increased risk and often require higher minimum investments due to their exclusivity and the regulatory requirements associated with accredited investors. Understanding the diverse strategies and unique characteristics of hedge funds is essential for those considering them as an investment option. Hedge funds employ a wide array of investment strategies, each with its own distinct approach and objectives. These strategies include long-short equity, global macro, event-driven and statistical arbitrage. Long-short equity funds seek to profit by simultaneously holding long positions in assets expected to rise and short positions in those expected to fall. Global macro funds make bets on macroeconomic trends across various asset classes and global markets. Event-driven funds focus on capitalizing on specific corporate events, such as mergers, acquisitions, or bankruptcies. Statistical arbitrage employs quantitative models to identify and exploit short-term market inefficiencies. Understanding these strategies is vital for investors looking to navigate the complex landscape of hedge fund investments effectively. Throughout the history of hedge funds, several strategies have gained notoriety for their remarkable success. One such strategy is the quantitative or quant approach, which leverages mathematical models and algorithms to make data-driven investment decisions. Notable funds like Renaissance Technologies Medallion Fund have achieved extraordinary returns using quantitative strategies. Another renowned strategy is activist investing, where hedge funds acquire substantial stakes in companies to influence their management or operations, aiming to unlock shareholder value. Activist investors like Carl Icahn have made headlines with their campaigns. Additionally, global macro strategies, as employed by George Soros's Quantum Fund, involve making broad macroeconomic bets on global markets, often yielding substantial profits. These strategies showcase the diversity and innovation within the hedge fund industry, offering investors a glimpse into the wide range of approaches used to generate significant returns. Understanding these famous strategies can provide valuable insights for both investors and aspiring hedge fund managers. Evaluating the performance of hedge funds is crucial for investors. Hedge funds often employ benchmark indices to measure their success, comparing their returns against market benchmarks relevant to their strategies. Key performance metrics include the fund's annualized return, volatility, and the Sharpe ratio, which assesses the risk-adjusted return. It's important to note that hedge funds aim for absolute returns, meaning they strive to generate positive returns in any market condition, rather than simply outperforming a benchmark index. However, achieving consistent outperformance is challenging, and many hedge funds may not meet their objectives. Additionally, investors should consider the impact of fees, as hedge funds often charge management fees and performance fees based on gains. The regulatory environment for hedge funds varies by region and has evolved significantly over the years. In the United States, the Dodd-Frank Wall Street Reform and Consumer Protection Act brought about substantial changes in the hedge fund industry. It mandated registration and increased reporting requirements for hedge fund advisors managing assets above a certain threshold. Regulations aim to enhance transparency, mitigate systemic risk, and protect investors. Internationally, regulatory frameworks also differ, with some countries imposing stricter regulations on hedge funds than others. It's crucial for investors to understand the regulatory landscape in their jurisdiction and how it may affect their investment choices. The investment process employed by hedge funds typically follows a structured approach. It begins with rigorous research and analysis to identify investment opportunities and assess potential risks. This phase involves gathering data, conducting financial modeling, and performing due diligence on assets. Once opportunities are identified, hedge fund managers move on to portfolio construction, where they allocate capital to different positions based on their strategy. The trade execution phase involves implementing the investment decisions, which may include buying and selling assets in various markets. After establishing positions, hedge funds continually monitor and adjust their portfolios to respond to changing market conditions, news events, or shifts in their strategy. The investment process requires discipline, expertise, and a deep understanding of the chosen strategy, and it plays a vital role in the fund's overall success. Investors considering hedge funds should have confidence in the fund's investment process, as it directly impacts their potential returns and risk exposure. As we conclude our exploration of hedge fund strategies, it's evident that the world of finance offers a diverse array of techniques and approaches to investment. From quantitative modeling to activist campaigns and global macro bets, hedge funds employ strategies that have reshaped the financial landscape. To stay informed, we encourage you to subscribe to our channel.